Welcome back to China Uncensored. I'm Chris Chappell. China's housing market, it's grown up so fast. China's real estate boom is now in its teenage years, and you know what that means. It's constantly getting into trouble. China is building real estate faster than beavers build dams. That is, faster than beavers with chainsaws and backhoes build dams. Obscure Chinese cities you've probably never heard of look like this, and this, and this. It's because China's manufacturing industry has expanded so quickly over the past few decades. That's pushed hundreds of millions of people to move from the countryside to the cities. Fun fact, more than 100 Chinese cities now have over 1 million people. Compare that to just 10 cities in the United States with over 1 million people. Sorry, San Francisco, you're going to need another 140,000 more tech bros to make 1 million. And is it really worth it? Anyway, with so many Chinese people moving to the cities,
big boom is the result.
That will never get old. The problem with big booms, though, is that they're often followed by devastating busts. In the US, housing prices saw a boom after 2000 when mortgage rates dropped. Then, in 2008, there was a huge crash. Big cities have recovered, but most of the country hasn't. So could this kind of crash happen in China? Some economists say it already has.
The bubble has broken. That's it. They overbuilt.
Prices are falling in many top cities. But let state-run China Global Television Network assure you, everything's going to be just fine.
We've been talking about bubble for many years, but it continues to grow bigger and bigger, and it never seemed to burst.
Yes, it never seems to burst, which is surely proof that it never will burst. Buy a beautiful volcano view home in Pompeii, the city where nothing ever goes wrong. There are two main reasons for China's real estate boom. One is that more people are living in cities now than ever before in Chinese history. This chart shows that when former leader Deng Xiaoping began his famous reform and opening up, just 18% of people lived in cities. Now that figure is 57%. And current leader Xi Jinping hopes to reach 60% by 2020. But the problem is that a lot of the housing isn't being bought by new homeowners, young families from the countryside starting a new life in the city. Those migrant workers are often renting cheap apartments on the outskirts of the cities, or in places like these underground bunkers in Beijing. No, a lot of the new homes are being snapped up by China's growing class of nouveau riche, people who've recently earned a lot of money and are looking for places to invest. This is the deeper reason why real estate prices keep going up and up and up. Chinese people have no other good places to invest their money. The Chinese bond market is weak. The Chinese stock markets can best be described as Las Vegas casinos, but without the tasty buffets. And the latest investment trend, wealth management products, can be as opaque as a window painted black, covered in a curtain in front of a brick wall. Plus, there are severe limits on how much Chinese people can invest overseas. So where do you park $1 million? Real estate. For example, Shanghai resident Miranda Chen, who was interviewed by Vice.
Ms. Chen and her husband have purchased 2 Shanghai apartments in the last few years. They're now on their hunt for their third.
This is not what the Chinese government wants. As state media says,
authorities in China are sending a clear message. The property market should provide homes for people, not investment vehicles for the rich.
So to cool this out-of-control housing boom, the government has implemented various restrictions. For example, to discourage people like Ms. Chen and her husband, last year, Shanghai added a requirement that second-time buyers must make a 70% down payment instead of China's typical 40%. But not to worry, they found a loophole.
你如果是婚姻状态，有一套房子，你买第二套的话，那就是付的比例要很高。我们也是听朋友介绍，我们夫妻俩就去形式上做一个离婚。
Yes, they actually got divorced so they could buy an investment property with a smaller down payment. Shanghai has since closed that loophole, and they've also implemented other restrictions to cool off the investment market. Those include capping prices on certain new developments and requiring buyers to use their real names instead of using shell companies to get around limits on second homes. Beijing has implemented similar restrictions to discourage second and third homes. In Beijing, the average two-bedroom, 1,000-square-foot condo sells for a whopping $1.2 million. In one downtown neighborhood, the average housing price has tripled since 2010. 23 other major cities have also added restrictions on home buying in the past year. All this is to say, for all the talk of China being a so-called free market economy, the real estate market is being controlled heavily by the government. And the government feels it has to control it because that's the only way to solve the problems it created by controlling the other markets, like stocks, foreign exchange, and other investment vehicles. Oh, and they're also trying to get rid of unsold real estate by encouraging migrant workers to buy instead of rent. The problem is that many still can't afford it or just don't want to. So will China's real estate bubble burst? On one hand, it could burst at any time. Prices are so outrageously high that the average housing unit in China costs 160 times the average person's income. On the other hand, the government's restrictions may cool the market enough that the bubble doesn't pop, but just settles down. On the other hand, the Chinese government wants to keep prices increasing because that spurs construction, and construction means jobs and GDP growth, both necessary for the Communist Party to stay in power. On the other hand, real estate prices are getting so high that it's affecting the rest of the economy. If your monthly mortgage payment is 75% of your income, like with this guy, well then, you're not going to be able to spend that much money on other stuff. That's a problem when the Chinese government is depending on people buying more stuff to prop up the economy. Of course, the problem with real estate bubbles is that you can't tell whether they're really bubbles until after they burst. So how about that Volcano View property? It's a great investment. So what do you think? Thanks for watching this episode of China Uncensored. Once again, I'm Chris Chappell. See you next time. You know, if only you had invested early and gone to our website, ChinaUncensored.tv. You could have seen the entire full-length episode last week, which included this and other segments. Our website also doesn't get demonetized by YouTube. So check out ChinaUncensored.tv. Link is below.